Hey everyone, it's Josh with Vancouver Real Estate today at McDonald Realty. And today we're going to do something a little different. What you can expect in this video is for me to take you through some of the back end data that I track every day. These are the Excel spreadsheets that I work on every morning before the sun is up to see what's going on in the market. This week I'm going to show you Vancouver on the west side for condos, townhomes, half duplexes, single family homes. That's a house. I do have this also going for the east side of Vancouver, North Vancouver, and North Burnaby. So these are four markets that I track daily to see how many new listings in the last 7 days, what's the current inventory level, how many have sold in the last 30 days, and how many have expired, failed to sell, come off the market in the last 30 days as well. And then I also track the absorption rate, also known as the sales to active ratio or the selling rate, and also the months of inventory. And so I've got this in a really easy to comprehend file with some charts and some spreadsheet stuff and colors, and it's going to be great. If you want to know what's happening in our market up to this minute today, which is May 14th, all the way back to the beginning of 2020, just to see where we've come from January up into March, where the spring market was starting to take off. And by the way, the market was on a pretty good tear all the way through there, to what happened with the coronavirus and where we're going right now. This is all the things I'm going to show you this week, and we can do this for other markets, but it'll be the west side of Vancouver this week. I want to give you some opening thoughts on the state of the market right now before getting right into it. So why don't we just jump right in? I've got some notes. If you see me looking down, we're not doing any on location fancy backgrounds this week. You're just catching me in my condo in Yaletown Park. And yeah, so let's get into it. And I'll share you the screen too, so you can just kind of take in these charts while I'm talking about the opening remarks. So here we go. Hopefully you can see the houses on the west side. I want to start with condos, and yeah, why don't I just make that a little bit bigger too? So, okay. So last week I gave you some pretty bleak sounding numbers, and I'm just going to give you a quick recap of that uh, because yeah, it's been a strange little time for us. In April 2020, the sales in Vancouver have plunged by 39% year over year from where they were in last April 2019. So that's the slowest April in 19 years. So sales were really downright terrible, worst on record, and new listings equally poor, miserable. So when the new listings shrink and the sales shrink, it doesn't do a lot for prices because there's no time for inventory to build up. And also, real estate's very slow moving. We're not like the stock market here. So it takes a while for inventory to build up, transactions to happen, and then you'll see what happens with the prices. So that's why prices have remained pretty strong at the moment. So, what do we want to make of this? The sales to active really, as of the coronavirus, they went from 3.9 months, which is of inventory, which is just into a seller's market, to 8.4 months of supply, which is now we're into a buyer's market. And the sales ratios went from 25%, that's, you know, a quarter of homes on the market selling, to 12% being just a little bit more than one out of every 10. So we've never seen anything close to inventory doubling in a month in Vancouver before, not even during the depths of the financial crisis. Of course, there's no real ability for us to measure the prices on a monthly basis, especially when the volumes of the sales just crash to this kind of level. What I can say is, again, for the most part, prices have held firm, and we have seen some minor price discounting along the way. Condos that would have sold got multiple offers in early March ended up selling for maybe slightly below the list price in some of the later weeks into this thing. So just some stuff to consider as we go into this. And I won't get too far else into giving you thoughts on all of that. I do have some other stuff I want to address as we get further along, but let's just look at these graphs. This is a spreadsheet that I maintain every morning before the sun is up. I am inputting new listings, active inventory, sales, and expireds, just so we can track and see the trend here, right? So at the beginning of January, nobody really lists because we're all still in holiday mode, and then we get up to really a baseline here. And as we see, we get into the spring and new listings start to come, people getting ready for the spring market. Then coronavirus happens. We also, well, it was already happening, but our stay-at-home orders kind of, well, I know we didn't have stay-at-home orders, but you know what I mean. We all started to isolate and physical distance. So here, then we see the new listings fall off a cliff pretty much, and we have seen things start to pick back up though as the sentiment's begun to improve in the with with the economy starting to reopen, and um, and yeah, just people being a little less fearful now that we've flattened the curve. So you can see inventory building on a pretty steady trajectory to that high point in March, and then it kind of comes down a bit again, and now we're seeing it start to climb. I noticed the climb maybe a little less than 2 weeks ago. We saw a bit of a jump from maybe 1,060 or so condo listings on the market at one time to 1,120, and I thought, okay, the inventory is starting to pick up, and that's when I wanted to originally do this. But with 3 new listings myself having come on at the end of April, I guess that goes to speak to it as well. It's Yeah, I just didn't have time for you to do that at that point. We can see the sales, right? They continued along for a little bit here because they lag. People write up contract deals and they have subject periods, and it takes a bit of time for the sales to get reported and that data to get tracked. So when you hear reports in the media, they're always behind the 8 ball. You really need a realtor who's on the ground and active and doing this kind of tracking and being active in the market with listings and sales to share with you what's the true story, what the real truth is. It was not something you're going to get with like a 1% realty or trying to sell yourself. So we have seen though, this is the great news story, right? Is sales are starting to pick up. We're seeing it here. What I'm seeing in the market is a lot of first-time home buyers, a lot of investors, a lot of people who don't have something to sell, a lot of flight to real estate as a safe haven. Even on the west side, we'll get into this later, but we're seeing houses on the west side over 3 million sell in multiple offers, even in the last week. And I will remind you, it is May 14th. So here's the expired listings. These are homes that have failed to sell and have the listings have just expired. They come off the market. Oftentimes people bring them back on. You can see a big drop off at the end of January. There would have been way more just at the end of December. A lot of people's listings expire, and not anything overly exciting to report here. On average, every 7 days in 2020, we've had 100 listings come on. You can see that begins, a little low, and then we get into January, boom, everybody's coming on the market. We try to beat the rush, that holds steady. We get down into April once the COVID stay-at-home orders are in place, and a lot of realtors not knowing how to do videos and run a business with technology. We can see some issues happening. Listings sinking down to 65 at the low. I think no, 58, 54, even 35. But we have started to trend upward again, and now we're above 100 as agents have made the pivot for the most part to being virtual, or the curve is flattened and people are kind of getting back to life as normal to some extent with all those protocols and precautions, like we're wearing masks on showings and all this. Still no open houses at this point, but that gives you an idea what's happening with the new listings. On average, we've got 1,026 of inventory. It starts out low in the year, as we've talked about, but I'll show you 1160 being the highest inventory. Look where that is. That's today. As I said, about a week or two ago. In fact, it was 7 days when when I noticed this happen when we passed the 1100 threshold. Um, the inventory is starting to build up, but the sales are also starting to increase. You can see it right here in the last week, even in the weeks prior to that, right? Sales increasing, and they kind of trailed off here as the um, as as that lag kind of played through the system, rinsed through the system. So something to be mindful of. But our average sales is 137 in a 30-day period, with the most being 230 happening somewhere in mid-March as the spring market was just about to get rolling, and then this all happened. I wonder if that was the exact day even. I can't remember. It's close though. And now we're down to, 60s, 93. But then again, our average sales is 137. We won't need to pay too much attention to these numbers at this point. But yeah, something to keep in mind. Now, I talked about the absorption rate and the months of inventory. So absorption rate, similar, it's your sales to active ratio. If we're under 11%, of absorption rate, then we're in a buyer's market. If we're at 11%, 12 to 19, that's a balanced market. I've got the buyers signaled by the green, the balance signaled by the blue, and a seller's market signaled by a red fill. For the months of inventory, if you have 4 months or less of inventory, that's a seller's market, red. If it's balanced, that's between 4 and 7 months, that's blue. And if it is a buyer's market, you've got more than 8 months. So at present, the west side of Vancouver is every product type is in a buyer's market. That is condos, that is townhomes, and probably half duplexes. I don't watch those ones as closely, and as houses. On the east side, it's all balanced, except condos on the east side, still balanced, but verging on a seller's market. So something to keep in mind. The market has picked up in the last few weeks here. But you can see at the beginning of January, not a lot happening in the market. We are generally in a buyer's market. You might wonder too why these aren't exactly matching up. Reason being is we tend to, when we do it like in the middle of the month for these kind of numbers, we extrapolate based on the number of sales and then project what the months of sales will be, just based on like if we've had 3 weeks of this many selling, and we assume the 4th week is going to have the same number, we can say this many sales in the month and then use that as an average with which to generate. For simplicity of Excel and just my level of aptitude for this kind of stuff, I just do it based on the exact date, and it gives a general picture with that end of the month data, being able to calculate on that, get that on the spot. So, but this gives us the picture, right? Again, we said 19 was the balanced market. Once we get it to 20 or above, it becomes sellers, and again 4 or below. So these are matching up pretty closely, and it being in March, we can see that is when things start to pick up. So we had February, we're starting to trend towards heating up for the spring, and then we cooled down for the coronavirus stuff. But we are seeing things start to go the other way again here, being the sales ratios picking up, the absorption rate, right? We're seeing more homes absorbed, being sold, in other words, and the months of inventory shrinking, despite listings climbing, because the sales are catching up as well. So gives you a picture of what's happening in the market. Anecdotally, I've had multiple offers on the two out of the 3 condos I've had on the market since for about 2 weeks now. So just shows you what's happening. Those are 1-bedroom condos on the west side. Now, townhomes we can look at as well. right? Same idea, inventory kind of catching up to its benchmark. And sometimes I wonder if I have typos when you see this, but you can see it really built up in February, and it's a little bit all over the place. Reason for that is these are smaller numbers, right? The condos, we're looking at hundreds and even 1,000 for at least for the active inventory, and we're looking in the sort of hundred for the condos, as you can see over here. So it's just smaller numbers, so the graph jumps a bit more. It's a bit more dramatic looking. Inventory staying fairly steady, climbing, right? And then dipping as we head into the coronavirus, staying at home. And now we're just starting to see it tick back up again. Sales did the same thing. At this point, you can see, maybe 17 in a month are selling around that. Average, we have 19 townhomes sell in a month, the highest inventory being 215, and our average being 187 with 4 new ones or 14 new ones on every day. I should have is it's too complicated for me to put days on market in here. That's something you can reach out to me for, and I can tell you that. I just can't put that into a spreadsheet every morning at 5 in the morning, or I'll be doing that all day. You can see 177. We're under our average inventory right now at 100 for townhomes. So it's less townhomes than usual. You can see it shrunk, which is a bit interesting. And sales, if our most is 39 and our average is 20, we are below average on the sales. So you can see again with the colors, we were just starting to get into the seller's market territory at the end of March, with this being a bit of a lag. So realistically, these sales happen somewhere up in here probably. And yeah, so there's just an idea of what's happening with the townhomes. Duplexes, again, really small numbers for the half duplexes, so hard to really give you too much trends. I think this is just maybe for interest. You can see anytime we have generally 15 to 27 townhome or half duplexes on the market, and we're generally seeing half dozen of those sell in any 30-day period, and about the same expiring. So we get usually an average of 2 in a week, sitting about 20. It looks like 18 on average on the market. Highest inventory, 7 more than that. Most sales in a 30-day period this year is 7, with an average of a little less than half that. So right now, this one you can see it jumps around a bit more again because the numbers being so small, they jump quicker. But the moment only had 1 new listed in the last 7 days, only 16 on the market, 4 sold in the last 30 days. But so let's look at the houses, right? Inventory builds up, peaks in March, really comes down for for March. With a big, people just don't want people in their house when they're quarantining, especially where else are they going to go? We couldn't have gone to coffee shops, can't go to restaurants. Maybe get shouted down if you're outside at this point in the pandemic, in the stay-at-home news cycle. So just really interesting to see how the new listings are building back up. But all through this time, houses still selling. Real estate never stops, even in a pandemic. The active inventory is right. It shrunk. It's held pretty steady, in between the high 400s and 500s. And then it comes down, gets under 400, and we still haven't really got or it doesn't get under 400, gets under 450, and we still haven't really got back up to 450 yet from where we were. So the inventory is low for houses on the west side. Solds, again, did the same thing, but they are trending upward again ever since kind of about a month ago, it looks like. We started to make that trend. And I think that really agrees with the sentiment that was out in the marketplace, right? We're well below our average inventory right now, and our highest being 532 this year. I will know the sales will be down as well, but you can see all these numbers that we've been talking about. If we scroll right down, we'll see right? 22 listed in the last little bit, last 7 days, which is up from where it was early for the last few weeks, right? Here's when it all started to spring market in full effect, getting going. Then okay, now we're into stay at home, and now it's building again. So the market is picking up, and inventory is still quite down though. Look at that, it is down. Although you still have, with the sales down so far, although again they're building, you do have 14 months of inventory. And what's our average inventory? That's what I need to put in here next, is our average inventory. It was way higher though, but in this year, guys and gals, it was 50, 30, 20. Again, these are changed, calculated a little differently at month's end. And then in the early spring, it was looking a lot better, but still worth thinking about selling your house if you want to sell it while the prices are high, and before we feel too many of the economic shocks from what's been happening. Well, of the strange days we're in. Anyway, maybe I'll just give you a look at the color scheme, right? Really, buyer's market through and through on the west side, and then started to heat up, balanced market as we got into March. So if you are looking at doing something with your house, I would say think about it now, because, or even if you're thinking, and if you're thinking about buying something, because it's changing. We are seeing change. Things are starting to move towards, I don't want to say normal, but I will say a new normal. And here's something you gotta take into consideration. Uh, Let me know if you want to look at what other areas you want to look at, if you want to talk about this stuff in more detail, and I'd be happy to. But let me just read this graph I saw come out this week. Hang with me here. It from Stats Canada, we can see that this contrast in Canadian jobs losses across Canada really being staggering. Number of employees in lower paying occupations, the number of employees in lower paying occupations was down 30% year over year in April, while mid-range employees, mid-range paying occupations rather, was down 20%. Guess what about the employees in high wage occupations? Only down 1.3% year over year. So what does that mean? That means it's the lower income people, the lower paid jobs, the middle jobs. Those are where the job shedding is happening. The people in the high income jobs are have held on to their jobs. They're working from home. They're able to do that. But and what we're likely to see here is uh, more of concentration of wealth, right? It's going to be people, the haves, buying more assets, accumulating more real estate, and I just think that's really a lot what we're going to see. It can't be anything different when you have those other two classes of occupations shedding jobs, and those at the top with the higher paying ones holding on to them. They're gonna not be putting their money in the stock market, I would think, because that's a risky place to be right now. Why not flee to the safety of or retreat to the safety of real estate, particularly dirt, right? Condos uh, are are great for a lot of reasons, but we do have a lot of condos completing in the next 36, or excuse me, in the next however many months, right? 12 months or so. It's something like 36,000 completions on the way. Uh, Really something to consider. Of course, downtown Vancouver, it's always going to be pretty bulletproof in my opinion, because everyone wants to be here. I was just looking out my window in Yaletown, thinking about downtown Vancouver, excuse me, and how expensive it is to be here. So I think I'm just getting to rambling now, but I could talk to you about this all day long. We could go into the other charts. For the sake of not keeping you any longer, if you're still watching, leave it at that. Reach out to me, and we can dig into your specific area, your specific price band, your specific product type, and really show you what's going on, because I love this stuff. So I'm Realtor Josh Kepke. This is Vancouver Real Estate Today. Uh, Visit me at vancouverrealestatetoday.ca for expert interviews, home tours, listings. What else do I have on there? Buyer tips, seller tips, pretty much anything you could need in real estate. You can DM me on Instagram at Josh Kepcake. You should be following me if you're not following me there yet. I put out lots of good stuff, uh, from the from real estate stuff, uh, related things to my dog because it's Instagram, and some of the volunteer work I do with the kids, and I whatever else people put on Instagram, I guess. Can't think of it right now. But yeah, that's me. And you can always reach out to me on my cell phone, always available, 604-313-9805. Give me a call, shoot me a text. Love to hear from you. Otherwise, see you next time. That was the state of the market for Vancouver's West Side on May 14th, 2020. Bye for now.